Welcome to Alpha Recap, your quick after-hours wrap of the day's market movers. Energetic day, huh? As always, if you have questions, you can reach us at stockalpha.ai.
Yeah, lots to unpack. Markets closed with some clear themes. Semiconductors leading, a big logistics move from Amazon, and a string of corporate actions that matter for income and fixed income.
So, what really stands out here is how a few concentrated stories drove volume and headlines. Let's start with chips.
Right. NVDA finished the day up about 2%, closing around $219 and change, on heavy volume, roughly 157 million shares. Intel jumped roughly 3.5% to about $129, with volume near 178 million.
And the number that really caught our eye was how active the tape was. Analysts note that heavy volume can amplify short-term moves and pull in derivative flows, which often makes these rallies feel bigger than they might be on fundamentals alone.
I mean, when you step back and look at this, momentum plus liquidity is the combo. NVIDIA's gains are still tied to the broader AI narrative: data center demand, GPU appetite. Intel's move could be catch-up sentiment, or maybe there are company-specific catalysts. Analysts are debating whether this is a re-rating or a momentum trade. There's also event flow behind it. Augmented World Expo and other XR gatherings earlier this week highlighted hardware demand that maps into chip order books. So that narrative feeds NVIDIA and the whole compute complex.
Right. And logistics and compute are starting to overlap more, too.
Exactly. Amazon expanded its 30-minute delivery option across dozens of U.S. cities, a faster fulfillment push that could lift order frequency but requires more logistics investment. That incremental routing and real-time compute needs edge stacks, which can indirectly boost chip demand if volumes stick.
So, what really stands out here is a trade-off. Faster delivery can increase sales velocity, but analysts pointed out it can pressure near-term margins because you need more people, more vehicles, and more tech.
Right. And the other thing is, markets sometimes price in that longer-term upside without waiting for the margin math to show up in the numbers. So follow-through and metrics will be important.
Another cross-market note: Morgan Stanley joined as a primary dealer in the Israeli bond market. That broadens their fixed income footprint and signals more cross-border distribution and trading in sovereign debt.
That matters for bond market access. Having a major global bank in the primary dealer roster can boost issuance demand and secondary liquidity for Israeli sovereigns. Something to watch if new supply comes and global demand shifts.
Moving on to corporate actions. There were several items that income and healthcare investors will care about.
Lockheed Martin declared a quarterly dividend of $3.45 per share for the second quarter of 2026, payable June 26, with a record date of June 1st. That keeps cash returns on track for income models.
Yeah, that tracks.
Johnson & Johnson launched the Shockwave C2 Aero coronary catheter, a new device in their cardiovascular portfolio. Analysts will be watching early adoption, pricing power, and margin impact as it rolls out. EOG Resources
Also has a company presentation lined up at the Bernstein Strategic Decisions Conference on May 27th. CEO commentary there could give clues on capital allocation and guidance nuance.
Right.
Short reactions.
Got it.
Now, not all headlines were rosy. There were 2 securities fraud notices that landed today for smaller names.
Immunity Bio had a law firm soliciting potential lead plaintiffs for a securities fraud class action. And Power Solutions International had a similar notice. Those filings can stretch uncertainty, crank up volatility, and affect liquidity for small caps.
Analysts typically say these filings aren't an immediate fundamental change, but they are a volatility driver. You often see periodic headlines tied to docket activity and potential settlement surprises.
For anyone tracking small cap exposure, the sensible move is to monitor filings and court deadlines, rather than treating the notices as instant company verdicts.
Switching gears, there were several partnership and channel moves across software, services, and enterprise integrations.
Yeah, Kinway Consulting partnered with Transforming Solutions. TPM integrated Hunley into its CRM solutions for AEC and manufacturing verticals. Red Rover Health joined Oracle's partner program. Graytech earned a Bluebeam Sapphire partner status. And there's guidance from Tusk practice sales to dental practice owners about unsolicited DSO offers.
The common theme? Channel expansion and partner-led scaling. But the market usually wants to see measurable pipeline and customer wins before assigning multiple expansion.
Exactly. Partnerships can translate into recurring revenue over time. But analysts will be looking for concrete metrics, not just announcements.
On ESG and workforce initiatives, we saw some interesting pilots and launches.
TNFD, Conservation X Labs, and the UNDP announced winners of a Nature Intelligence for Business challenge aimed at helping small and medium enterprises measure nature-related risk. STC launched a DE Academy to speed digital and model-based systems engineering, and there were new nonprofit and awareness initiatives around workforce and healthcare.
So, what really stands out here is that these aren't just feel-good headlines. They're tooling and credential plays that can unlock addressable markets over a longer time horizon.
Short reactions. Now, a quick note on volatility oddities. EasyGo, a penny-level name at about 4 cents, traded roughly 1.7 billion shares, but finished flat on the day. And a leveraged inverse ETF fell about 1.5% on very high volume, nearly 274 million shares.
Heavy volume at micro price points or in leveraged products is a liquidity story more than a fundamental one, but it creates execution risk and wider spreads for traders.
Analysts treat that activity as a liquidity event. Institutional players usually don't read too much into it for fundamentals. But retail and speculative flows can cause sharp intraday moves.
Time for patterns and a quick wrap. From today's briefs, the themes were pretty clear.
AI and semiconductors remained center stage. Logistics and customer experience escalated with Amazon's rollout. Partnerships continued to shape mid-market, go-to-market strategy. Legal risk was active for microcaps. And ESG and workforce tools are moving toward pilots and commercial trials.
What to watch next? Keep an eye on follow-through in chips. Will NVIDIA and Intel keep the momentum? And will volume stay elevated? Watch analyst notes and any guidance updates.
Also, look for more details from Amazon about city lists and unit economics, any docket activity for the 2 litigation notices, corporate presentations like EOG's on May 27th, and how Morgan Stanley's new primary dealer role plays into Israeli bond issuance.
Quick takeaways. 1. Today's moves were driven by concentrated themes and heavy liquidity. 2. Corporate actions matter for income and product adoption, but watch actual metrics. 3. Legal notices are a volatility flag for small caps. And 4. Partnerships and ESG pilots point to longer-term structural trends.
Analysts note all of this as inputs for valuation and risk models, not as personalized investment advice. We're simply laying out the facts and what to watch next.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with another wrap. Have a good evening.